Okay, I think I get what happened. Okay, I did not. Okay, I think I get what happened. Okay, I did not. Okay, I think I get what happened. Okay, I did not. Okay, I get what happened. Okay, just 1 second. Let me put the cam on. I forgot to put on the mic. Okay, let's see. Let's see. Settings. Now the camera is not working. Okay. Okay. Let's see. Remove. Add to stream. The camera should be working. So sorry, guys. Just let me. Okay. I stopped the cam. Okay. Big blunder. Okay, when you are in a rush, I think a lot of things can actually happen. Okay, and the same for trading. If you are not patient, if you are in a rush, a lot of things that you can actually screw up in a trade. All right, okay, back to start. Hi, I'm Meng Hon. Thank you for joining. And of course, we are delayed today because I was actually stuck in a jam. And for those who have been with me struggling over this, I really appreciate it. If you can actually hear me well, give me a thumbs up and also put on the chat that all are great to go. Yeah. Okay, good. So as I was saying, today we are actually going to cover a bit more technical trainings, and we are actually doing some trainings today on options trading, and this is actually some very important thing for you to actually learn if you are trading the stock market using options. Yeah, and I'm Meng Hon. If this is the first time you joining us, welcome. This is actually the Traders Talk, and I think today we are actually it's the 41st or 42nd show. And we have actually been airing this for almost close to a year, almost close to a year right now. And we of course did a lot of content during all this, and you can actually watch all the past traders talk on the Facebook page. Yeah, and let's go. We are actually running late. So let me just put up the slides which I wanted to share with you today. Let me see. Okay. This. Okay. So do you guys know who is this? Do you guys know who is this? Okay, this is actually Elon Musk. And if you don't know him, of course, I think everyone knows him. And actually, yesterday itself, something great actually happened in the stock market. And of course, with Elon Musk, right? He actually moved a lot of. He can actually move a lot of things, including his own. Company, which is actually Tesla. Yes, so he's actually the owner and founder of Tesla. And yesterday itself, what happened was he actually bought I think it's about 9.2% of Twitter. Okay, that means he took 9.2% ownership in Twitter, and because of this, Twitter actually shot up by almost 25%. Yeah, 25%. from a $40 stock, it actually shot up to $50. Yeah. So for those people who actually own Twitter or who have actually a bullish trade on Twitter, congratulations. He have actually made you a bit richer. Okay. And of course, besides all those other people, he also made me richer yesterday itself, because I have actually a trade on Twitter. And of course, I will also share with you what trade I had, and basically how just do a short case study and actually show you what has actually happened in the trade. And of course, the thing is that I actually want you guys to actually learn about this, because I find that a lot of people actually trade options, but basically they just go into a trade, and it is actually a win or a lose trade, a win or a lose trade. And in options, one thing great about options is that in a losing trade, right? If you are actually having a losing trade, you can also convert a losing trade into a winning trade. Yeah. So it is actually not a win or lose, but you can lose and basically make a losing trade into a winning trade. And I will actually show you how that actually happened on the trade on Twitter, and basically how I actually turn losing trade into a winning trade. Yeah. Okay, great. So this is actually okay. So just a short recap on the markets. Okay, the market has actually gone up quite a lot since our previous show in end of March. We took a break last week. And when we actually had the break, S&P was actually at about 4,480 level. Yeah, 4,480, the S&P 500. And of course, last week it had actually continued to rally. Yeah, it had actually continued to rally. Like we said earlier, what we actually want to see is that the S&P rally up and then basically do a retracement before going up higher. And of course, this is what it did last week. It actually went up to about 4,500, and it actually retraced back below 200 moving average. It actually retraced back below 200 moving average before it actually went back up to went back up to about 4,600 level. Yeah, no, so this is the S&P, right? So now it is actually went up to 4,006 level, a level which we actually asked you guys to actually keep a watch at, because the 4,600 level is actually the level of the previous highs. Yeah, previous highs. Let me just put out the pen. Throw. Okay. Yep. So yeah, it went actually breached above 4,006, which was the previous high, right? This is the level which we mentioned, and then it actually retraced back to the 100 moving average, crossing below 100 moving average, and now it's actually going up again. Yeah. So yesterday itself, we had in actually yesterday itself is actually quite a slow and low volume for the S&P. But of course, even with that, it actually went up about 36 points. It actually went up about 36 points. Yeah. Why? Because this week there is actually some I think there is actually a Fed report coming out, if not mistaken, today. Yeah. So of course, with all these things coming in, the market would actually be quite cautious. Even having said that, the market has actually went up yesterday. Yeah. Okay, so basically, like I said in the past, right? Basically, what we actually want to see is the market going up, do a retracement, hit the support, and actually go up again. Yeah. So this was the level, it go up, and of course, the next level which we actually want it to breach higher is about 4,640 level, which is the last week high. Yeah. So of course, if it actually goes above 4,640 level, then basically the price action is actually going for higher highs. Yeah, higher highs, which is actually uptrend momentum which we actually want to see in the price action. And of course, even the 50 moving average is actually curving up, and what we actually want to see next is it crossing back above the 200 moving average. Yeah, so this is the price action which you actually need to keep a watch on the S&P 500. Yeah, okay. So on Nasdaq, right? On Nasdaq is actually also a similar kind of pattern. We ended up in March somewhere around this level, yeah, and then it actually went up, hit resistance at the 100 moving average, bounced back down, and going up again. Yeah. So of course, again, the same kind of pattern which we actually want to look at is for it to actually breach the previous high, which is about 15,200. Yeah, 15,200 level. Yeah, actually to see it breaching up above 15,200 level, yeah, before it actually can go on continuing its uptrend momentum. Yeah, so we have actually came quite far from the bottoms here. I think for Nasdaq it is actually slightly above about 11 or 12% up in just a short span of about 2 weeks here. Yeah. Okay, so this is Nasdaq, and of course, what is this? Okay, this is actually on Twitter, right? Okay, so this is actually what I actually wanted to cover on Twitter, and how Elon Musk saved me from my trade. Actually, Elon Musk did not really save me, lah. Okay, he gave me how to say, an immediate exit to a trade which I was actually in for quite some time. I was actually in a Twitter trade somewhere in December. Yeah, somewhere in December. So I actually entered a Twitter trade here. I actually entered here. Okay, and what I did was I actually did a cash secured put. Okay, if you guys don't know what is a cash secured put, a cash secured put is basically a naked put. A naked put, that means we are just selling a put, and of course this put we back it by cash. Okay, means cash in our account. And what I did was I actually sold a cash secured put at $40. Yeah, at $40, which is at this green line here, in December. Okay, so what happened was after I think sometime after I actually sold the put, the expiry was actually in January. Yeah, and this is actually the expiry date. And of course, before expiry, I think 1 week, about 2 weeks before expiry, this Twitter actually dropped to below $40, And of course, if you are selling a cash secured put, and if it drops below your strike price, means that you are going in the money. Okay, when you actually in the money, it's actually something not good for you, because when you are in the money, you are actually obligated to actually buy the share at a higher price at $40 when the share price is actually trading at about $37 back then. Yeah, so about $37. On expiry, share price dropped to 37. I was actually in the money of about $3, right? $3. When I did this trade, I actually collected about 90 US dollar. So of course, 90 US dollar, I had to buy the share at $40 on expiry, and the market price was 37. So you would actually, if you actually do that, what happened is that market price is actually, your price is actually 40, and market price is actually 37, right? And you actually need to pay, lose $3, which is $300, less the $90 premium which you collected. So basically, in this trade, you will lose $270. Yeah. So you lose $270 in this situation. Of course, for a trader, right? Of course, I did not want to actually get Twitter shares at $40. I wanted to collect the premium of 90. So of course, when this price is in the money, and it was actually at this level, right? So what I did was I repaired the trade. Okay, I repaired the trade. And when you guys are actually doing selling options, right? One thing good about selling options is that you can, when you are an option seller, you can always repair your trade. Okay, you most of the time you would be able to actually repair trades means from a bad trade you actually want to repair it, so that you can either go from a loss to a profit, or from losing a lot of money to losing less money. Yeah, so this is what we call a trade repair. And if you trade options, and if you do not know how to repair trades, this is something which you guys need to actually learn, so that you won't just go into a win or lose trade. You can actually go into a win and win trade. Yeah, so you can actually do that, and this is just what happened. And I will actually show you what basically I did, and this was actually the trade. This was actually the trade. 40 dollars put, which I sold in December. Yeah, so this was the trade time, December. Collected $90. And then the trade actually went in the money on expiry of 21st January. It went in the money. And of course, at that time, the thing was actually at $37, 28 cents. Yeah, 28 cents. So if I close the trade, I would actually lose $200 over dollars, less the premium which I collected, right? But I did not close the trade. Basically, I repaired the trade. And how I repaired this trade is that I bought back the January 40 put. I bought back the January 40 put, and basically what I did was I sold another new put expiring 18 February for 421. Yeah, so 421. I bought it back at $22.75. I will make a loss on that trade, but at the same time I sold another put at 421. Okay, and of course this was actually expiring 20th of January, and on expiry of sorry, this actually 18th of February. So on 18th of February, Twitter price went down even more. So from losing $200, I'm losing even more money, right? So it's actually going deeper in the money. Of course, I still did not close the trade. I still did not close entirely the trade. I continued to actually roll the trade, rolling trades. Yeah, I continued to roll the trades, means I bought back the February put at 575, and I continued to actually sell another at 603. Yeah. So one thing which you guys need to note is every time I sell, the selling price of the options is higher than the price I pay for the closing, which means at every rolling, I actually make more money. Okay, despite losing in the trade, that means despite the trade being in the money and I'm losing the trade, but every time on expiry, I make more money. Okay, so this is actually what is great about credit trades. Which means that these trades can be repaired. And of course, the thing did not continue to go well. Okay, on 18th of March here, expiry. Again, what happened is it still did not go above 40. Okay, so I am still in the money, but of course, price actually recovered to 38.60. And for that, I continued to actually roll the trade. I bought back the options at 128, and then I sold another new put 40 same strike at 179. Again, on expiry of 25th of March. 25th of March, it did not go out of money. It still continued the same. And I continued rolling the trade again. And this time I bought it back at 221, and I sold another one at 248. Again, collecting more premium, although it's a loss trade. And of course, on 1st of April, again, it still, that means was last week. Last week, it is 39.31 closing, and it's still it's still in the money. And again, I continue to actually bought back the old put at 71 cents, and I sold another one at 129, collecting even more premium. So of course, this week what happened was because yesterday Twitter price shot up to 50, right? So basically, the trade which I have here, the premium which was left until yesterday was only about 5 cents. Okay, 5 cents. So that means today, if I actually close the trade, I buy back this option, I will only need to pay 5 cents, 5 cents to buy it back. So in total, right, what I did from December, when I actually opened the trade, I was losing all the way. In fact, until last week, I was almost winning. Like, even if Elon Musk did not tweet to say did not tweet, no, did not buy this what is that, this Twitter, I would have continued making money on Twitter every week, because I was actually rolling more or less every 7 days subsequent to that. So I was making 30 or 40 or $50 every week, rolling trades. And of course, since now he has actually made my trade to go out of money again, I need not roll it anymore, and I can actually exit the trade, close the trade, and I would have actually made a premium of, in total, of about $392 over a capital of $4,000. Yeah. So the cash secured is actually 4,000 to actually enter into this transaction, and I collected all in with all these rollings 392, which is basically a return of close to 10% in around 4 months. Yeah. December, close to about 4 months. Yeah, about 4 months, 10% return. Even on a losing trade, I generated about 10% return. Yeah. So this is actually what we call rolling trades and trade repairs. Yeah. So you can actually do this on naked puts. On naked puts, if you are actually going in the money, don't panic. Don't panic, because you can always actually collect more premiums by extending the time. And of course, when extending the time, right, you will actually get to be paid more extrinsic value for this selling of options and taking the risk. You will actually get paid for time, and this payment for you to actually to continue the trade and continue to take the risk, you actually get paid more than what you buy back the old trade, which is actually a losing trade. Yeah. So this is very important, and if you are actually doing this, technically you can actually do this for months. For this case, I actually did it for 4 months. And of course, if the trade price was hovering still around 37, 38, 40, I would have continued to actually generate income through rolling of trades. Yeah. So again, this is actually in number terms what actually happened in the trade. Like I said, I entered the trade, collected 90 cents, entered 90 cents. And then the trade went in the money. I can actually choose to close the trade and basically pay 275 to buy back the option. And basically I make a loss of 185 on this trade, but I did not do that. I basically did a trade repair, and I basically roll in time. And this rolling, what I did, as I said, was to buy back the option at 275, and then I sell another cash secured put with a new expiry period, and collected 421. And for 420, and for the difference, right? Basically on the first rolling, I actually made an additional premium of net of 146. Yeah, 146 is actually the net premium which I actually collected additional. Yeah, that means 146 the second time. The first time I collected 90 cents, and the second time I collected a net premium of 146. Yeah, so this is a trade repair. And in an illustrative terms, right, basically what we did, right, is that we basically traded to take more risk. That means not to take more risk, to actually continue to be in the trade and get paid for the risk taken. And of course, the risk is for you to have this obligation to buy the shares at $40 on expiry. Yeah. So basically, I get paid additional 146 to continue the trade. Yeah, which I committed to buy Twitter at $40. in the first trade of 42 days, collected this, and to continue the trade for another 29 days, I actually get paid 146. And of course, why you get paid more on the second round is, of course, the trade is actually already in the money. And of course, if the trade is slightly in the money, you will get paid more. Of course, if it is deeper in the money, that means if it's deeper in the money, means that if it is further down from the strike price, you will actually get less premium. But in any case, however far it is, I would say most of the time, you will be able to actually roll this trade. At worst, you can actually roll it with zero premium. If not, you might pay a slight premium. Of course, if you do not pay anything more than the premium which you collected, that means you will actually be able to recover the trade. So the first trade I collected 2.3% premium, and of course on the second trade on rolling I collected 3.7, and I continue to actually do this and all until yesterday. Basically, I collected close to 10% premium for the past 4 months. And this was actually the what we also call de-risking and buying time. Okay, and why de-risking? Because when I entered the trade, my risk was actually $3,910, which is the max loss, of 4,000, which is the put price. Assuming price goes to zero, and of course less the premium collected. And of course, when I started to roll it, I'm actually de-risking the trade. De-risking the trade means that from a max loss of 3,910, I reduced the loss to 3,764, the max loss. And of course, if I continue to do this, this value would actually go down over time because more premium is collected. Yeah. So this is my Twitter trade, and how basically I got out of this trade unsketched after 4 months. Of course, Elon Musk helped me do it faster, but I don't know whether to like him or to not like him, because I could have continued to actually generate $40 or $50 or even $100 in the trade every week selling cash secure put in Twitter. Yeah. So of course now the price have actually run to 50, and I will not be able to continue to sell cash secure put on Twitter because the price is already very high. I would not want to buy Twitter at $50 right now. Yeah. So that is on the Twitter trade. Yeah. So if you find this useful, and if this is the first time for you to actually learn about this, do relook at this traders talk, so that you can actually understand the concept of trade repair and rollings. Of course, it is not only on cash secured puts. You can also do this on other type of credit trades, including credit spreads. Including credit spreads, you can also repair trades. Of course, if you are in a debit trade, that means if you are paying to buy options, of course there is no way for you to actually repair debit trades. Those type of trades is difficult to repair because you are directionally wrong. Yeah, debit trades are directional trade, and if you are directionally wrong, you can only reduce losses by cutting loss. Yeah. Okay, so this is let me go back to the slides. Oh, where's the slides? Okay. Okay, so a bit on the market. This was actually yesterday's position, and of course, yesterday was actually a bullish tech run on tech companies. The Nasdaq had a rally of about 200 over points yesterday. Yep. So all the tech stocks has actually went up. Apple, Microsoft, Google, Amazon, Tesla, Twitter. Yeah. So if you look at all these, the technology, communication services, is all up. Is all up. Okay. So, and of course, the parts which is actually not up was actually the healthcare, the defensive, and what is that? The industrials. Energy was okay yesterday, and financials was quite positive also yesterday. Yeah. So this was actually the position, and like I said in the previous show, right? Previous show, when the tech goes up, right? When the tech goes up, the two main other sectors would actually tend to go down or don't move much. The one is of course on the defensive, and then the other one is actually on the healthcare. And in the earlier show, right? In the earlier show, I think the last show which we had before, that means end of March, right? What I did mention was on the healthcare, right? Basically, on the healthcare, I said that the healthcare was actually more or less topish, because before that the uh, uh, there was actually a bit more volatility on the tech side. Uh, the healthcare have actually rallied up since February without any retracement. It has actually just continued to go up. So of course, with now the tech stocks again showing more positive, the possibility of the tech, the healthcare side, and also the consumer defensive, right, to actually take a little breather, sit behind and let the tech take the limelight now, and the healthcare actually make a slight retracement. In fact, we also did mention earlier in our newsletter that of course one possibility is this UNH, right? UNH, which is in the healthcare, right? To actually take a retracement, a slight retracement, mainly of a possibility. Double top, of course, it continued to go up very strong, and in the past 1 or 2 days, it actually starts to actually take a slight retracement. And of course, in those kind of situations, and if you are actually trading stocks, there is also risk that they continue to actually go up and take you out, right? Take you out, go into a stop loss, and you lose in the position. But of course, if we trade options, we can always have a little buffer. If you actually trade structures like bear call spreads, where we actually have a little buffer even above the current price, and even let possibility of letting it continue to actually go up, as long as it don't breach your short strike on your bear call spread, you will be able to actually profit in the trade. So for the trade which we actually did on UNH, yeah, I would say if it continues to actually move nowhere or slightly go down, then we would probably exit that trade with at least 50% profit within the next one week. If tech continue to rally and they take a second place, sitting behind or going nowhere, yeah. So then of course this was actually the position for the past 1 month. Okay, so if you look for the past 1 month, basically from March till from early March till now, right? Basically, the whole market has actually went up by close to 8 or 9% for S&P, maybe now 10%, and for Nasdaq, of course, it actually went up probably about 12 to 13%. Yeah. So for the past month, it has actually been a very bullish market. But for the first quarter itself, it is actually still down. This is actually the position for the first quarter, where the tech and the communication service is actually down, and the only sector which was actually more or less up is the healthcare. Like I said earlier, healthcare had actually done quite well in the first quarter. Plus, of course, the best performing sector was actually the what is that? The energy sector. Energy and utilities were the best sector. I think since last year, they were the best sector. And of course, with oil prices now at about hovering at 100 US dollar, right? So basically, the oil and gas sector would actually continue to perform. I mean, of course, if all this war and all this continue to linger around, they would actually continue to be on its high, but of course, if things actually improve, that means the war cease, things goes back to normal, then of course this sector may see some retracement going forward. Yeah. Yeah, so this is actually what has actually happened in the past 3 months, past 2 months, and also past 3 months, past month, and also current. Yeah. So one of the sectors which we actually are also keeping an eye on is on the hospitality sector. Okay, and of course, if you look at the hospitality sector, means hotels, right? Hotel, theme parks, and all. Um, um, I mean, I think since COVID has actually improved, I think since this first quarter this year, right? First quarter this year, a lot of people are actually going back to, going for holidays. A lot of countries has also opened up, right? A lot of countries has also opened up, and including Malaysia, we also open up all our borders, right? People can actually come in. In fact, when we open up on the first day, guess who are the most people? Which country actually came in most? Which country actually came in most after I think about 2 years of restricted travel? Which are the citizens which actually came in to get 70% discount on all our goods, including petrol? Okay, of course, it's none other than our neighbors in Singapore. So who are Singaporeans here? Please give me a thumbs up whether you enjoy 70% discount shopping for petrol and also goods in Malaysia. Yeah. Okay, so as I said, a lot of companies like Disney has actually started to retrace up. In fact, actually, all of these have actually retraced up quite a lot since I think in March itself, it has actually went up a lot. But of course, one thing for you guys to actually keep an eye on is that in case the market actually retraces, okay, in case the market actually retraces, rather than how to say, rather than going in to go on speculative trades like on tech and all these kind of things, right? Because tech, of course, with interest rate and all these kind of things still coming in hikes in May, right? So there is actually still some form of risk. But one of the sector, in case it actually retraces, right, where you can actually get into very good trades and very safe trades is actually on the hospitality sector. Yeah. So in case it retraces, now don't buy now lah. I mean, don't buy now or don't trade all this because it's actually now on high. But in case the market comes down and these companies actually retraces to previous low, this is actually a very safe trade for you to actually enter. Yeah. So Disney is one. Marriott is also one. Booking.com is also another one, and Airbnb is also one which you can actually look at. So let's just show you on the let's just show you on the price charts of some of these companies, right? Share screen, share screen, share screen. Okay, where is the screen? Okay, okay. Let's use this. Okay, so this is what I said is Disney, right? So Disney, if you have followed us, of course, if you have followed us on Trader Stock, in fact, I think during this time when it was actually around this price, right, when it was actually retraced, we did highlight that there is actually a good buy-in point for Disney, right? So now it has actually retraced up here, and it's actually coming down again here. Of course, what I said is if the market retraces, and if Disney comes back to this level, then of course it is actually another potential for you to go into the trade. Yeah. Okay, so Disney is one. Marriott is another one, right? Marriott hotels, right? Okay, Marriott hotels is actually here. So this is actually Marriott hotels, and okay, so Marriott hotel. Is there anything wrong with sound? No, I think it's okay. Okay, so yeah. So this is Marriott hotels again. Marriott is actually have actually gone up here. Is actually retracing slightly, and of course the levels which we want to actually get in is around this kind of levels. If it comes down again, you can actually look into this again. Companies like this is what Hyatt is another one, of course. Similar kind of patterns. Once it retraces back to these levels, you can actually look at a trade. Okay. Yeah. Okay, and then let's see what else. What just now I was actually mentioned Hyatt, Marriott, Booking, right? Booking, right? Booking. BKNG. Yeah. Okay, so booking.com, yeah, booking.com again, you see how much it has actually came down here. Yeah, it came down here all the way second week of March, right? And it has actually rallied up here in just short three weeks. And of course, if again another potential comes, if market retraces, then of course this is one which you can actually look at also. Yeah, I mean. I mean, if you guys have not gone for holidays and whatnot for about 2 or 3 years, right? And of course, given the opportunity for you to travel, this would actually be something great. And of course, last week we did not have the show, right? Because I was also traveling, going for a short break, and we do see a lot of hotels and restaurants and all these packed with people. I mean, of course, COVID is still around. You still take precautionary action and safety SOP and all this, but that does not stop people from going to hotels and traveling. And with the country and borders now open up, right? Open up, then it will be even more people traveling. In fact, I think we already booked all our next few holidays. Not next one. I mean, basically all the next holidays, right? In the next in June, and you already so-called pre-plan and pre-book all the holidays already, and a lot of people are actually doing this. In fact, a lot of hotels or even what is that? So-called membership, club memberships, right? I mean, hotel membership are actually having a lot of promotions, and in fact, we also join this one of the hotel membership Club Marriott, right? We also join Club Marriott to actually enjoy their savings and also their hotel vouchers. And this is actually very cheap, and it's actually quite a lot of people going for all this. And of course, if you want to know more how to actually get these goodies, right? Just post me a note on Facebook, and I will actually refer you to the sales consultant, right, which can actually give you a very good deal on all this club membership. Yeah, and of course, for you to also save money, instead of paying full price on hotels, right, you actually just pay half price for your next holiday. So this is all for today. And if you have any questions, post and I can answer. If not, you can also post anytime on our Facebook page. Any questions you have, you can actually do it there, or even email us. And we can also answer. Email us here. Let me just put out the email. SUPPORT at support at mystarworld.com, right? Yeah. So this one, no, let me post it here. Support at my. So if you have any questions, post it there, and then we will actually answer you. I mean, if you get into any troubles in your trades or anything like that, just email us, and we will actually see how we can actually help you out on your trades, or any general questions which you may have on trading or options. Please put a note, and we'll get in touch. So until next week, we'll see you again. And again, sorry for actually starting this show late today. And I'll see you next week. So until then, please don't forget to train, trade, and thrive. Bye bye.